Hey, it's Tom Sheeran. Coming up next, we're going to answer 3 questions about today's mortgage industry and what's going on. Mainly, do I have to make my payments now, or what is the penalty? Good afternoon, Tom Sheeran here with Brookshire Hathaway Realty, and I think we can all agree much anxiety out there in the mortgage world of people wondering how they can pay their mortgage, if they have to pay, if there's forgiveness. And today we have answers and hope, and hopefully everyone will have a little less fear and anxiety. We're going to talk with Maritza Chiaway from Prosperity Mortgage and take a look at just what's going on. And Maritza, take it away, and you've got your slides, and let's talk about what's changed recently in the mortgage world.
Thank you, Tom. Good afternoon, everyone. Thank you for joining us. So, a lot of confusion on the forbearance. Forbearance doesn't mean that the debt or the mortgage debt is forgiven. It means that all those payments that we agree with our servicer not to pay, we're going to pay them later, either in the form of increasing our monthly payment 6 or 9 months from now, or adding that amount that we're not going to pay from now, we're going to add that back to the loan. So there's a lot of confusion as to, oh yeah, my debt is going to be forgiven. No, you're going to pay that eventually, okay? So I would advise to ask your servicer when you're talking about forbearance, a few things. One, is my credit going to be affected? Because if your credit is going to be affected, you're going to have 1, 2, 3, 4, 5 times late on your mortgage. And that could bring your credit score from a 740 to 480. So we will need to make sure that if you agree to this forbearance agreement, your credit is not going to be affected. That's the first thing. Second, how am I going to pay the 6 months that I'm going to miss? Is it going to be added back to the loan? I'm going to pay a higher payment in the next 6 months. And number 3, we need to make sure what is the amount that is going to be added to the loan if you agree to that, and make a decision. Because if it's principal loan amount plus a higher interest rate, I would think about it, because you don't want your equity to run out on your home. I'm sure a few years from now, you have other plans. You might want to stay in the home, you might not. You probably are a candidate for refinance after that, but you need to make sure that your equity is still on your home and is not affected significantly when you do this forbearance agreement.
So there's there's nothing free here. That's what has to be understood, I think, by most people, that they're either going to tack it on at the end of your loan, or there's going to be not a lump sum, but it'll be divided. They might give you a break for 3 to 6 months, correct? And then it would start again at a higher than your regular fee to pay it back.
Correct. And like the old saying, there's no free lunch on Wall Street. Same here. There's no free lunch in the mortgage business.
Mm-hmm.
The key is to ask the right questions. I am available to answer them when maybe sometimes the servicers don't do a very good job in explaining the homeowner what's going to happen with their credit and what's going to happen with their loan. I will be more than happy to help your customers, Tom, in answering those questions, or figure out a set of questions for them to ask when they call their servicer looking for a forbearance agreement.
Yeah, and I was just reading in one of your points, the lenders, some of them have actually paused their lending, and then this is pretty recent too, that they're a lot of lenders won't even look at loans without a FICO score of 640 or higher right now. Is that right?
It is correct. Mortgage business is changing rapidly every day, every 3 hours. We're not taking anything that has a credit score less than 640. Just to give you an example, a few weeks ago, a customer was at the closing table, and their closing didn't happen because the investor that had was about to lend that money pull out that product, and he couldn't buy his home anymore. So we need to be careful on not, while you do the mortgage process, you're still doing the mortgage process, and not to incur any more debt or open new credit cards or close credit cards all the way until the closing table. Because if you do that, even if your credit score changes 10 points or 15 points, then you could be out of the program very quickly, and your closing could be suspended right there.
Wow.
Mm-hmm.
And also the some of the government programs too are have they halted them completely, or there tighter restrictions like the FHA and VA loans? What's happening with those?
Great question. FHA, VA had the worst pricing up until yesterday because 2 days ago, the government decided that instead of buying 100% of the mortgage-backed securities is actually my loan, your loan, and all the homeowners' loan, and put into packages and sold on Wall Street.
Mm-hmm.
So what the government does normally periodically, it goes out and buy the securities to give some liquidity to the lenders, and lenders can lend more money. So it's a normal process. However, the market was expecting, because of this crisis, that the government was going to buy the full $40 billion existing in the market. Well, the government decided just to buy half of them. Okay, so a lot of lenders don't have the liquidity to go FHA or VA because they're a special kind of loans, and they have another set of requirements for lenders. So up until yesterday, the prices were on an FHA was the worst price ever. However, today, this is how quickly things changed. The government started buying more mortgage-backed securities, and the pricing pressure on the FHA and VA has gone down. So we're kind of like heading into the right direction to get interest rates stabilized. It's not over yet. There's still going to be some bumps in the road. So that's why I always recommend customers, if you are in a mortgage loan process, keep communication open and very closely with your loan officer, because things can change very quickly.
Yeah, and we'll see, of course, once we, I would say in a couple more weeks or month or so, and things are changing every day. We'll see a little loosening of these restrictions for now, and it's all, everything that's going on, it's just the current situation and temporary. And I guess that's the good news, that we know it's just measures that have to be done right now for the current condition with the coronavirus.
Absolutely, and I cannot reinforce more the fact that we need to keep a financial discipline as homeowners and consumers. Try to stay positive, reduce your expenses, and if you have to do a forbearance agreement, cut other expenses to it, but be informed before you do that.
Yeah, and I think just thinking of it, so it's really a deferment of your mortgage payment, not a forgiveness. And probably the best advice is, if you can keep making it, continue to. Otherwise, it'll. But also, if you need to make, emergency situation and defer it, do so. But I think the best advice is if you can still pay it, just continue to, and don't tack it on at the end, or you might have a big lump sum due in 6 months that could be even harder to pay than your current monthly payment. Anything else like statewide? And you're in Florida. Anything happening in Florida? What's the Jacksonville market doing? Are you seeing many applications currently? What's happening there?
Well, the applications are still going. Obviously, consumers or potential buyers have they don't have as many options as far as properties now, because some of the already existing properties, the sellers have decided to wait until this virus goes away to show them to public. However, in Florida, we still have financial assistance to buy your first home. We still have inventory. There's still out there, and people are going out and for the sellers that want to show their property, and they're still looking at property.
Mm-hmm.
As far as Prosperity, we're still open for business. Our business is now, we were possibly a good split to explain this. It was 90% of our customers were purchasing homes and 10% were refinancing. And now that split is slowly changing to maybe a 60-40, where we still have purchase business, but the other business that was 10%, which was refinance, it has increased to 40% due to the fact that, I want to refinance on a lower payment because I know my hours are going to be cut from my job, and interest rates are still at a 30-year low. So we're still open for business. Most of our back office is working remotely. The front end is also working remotely, but the transition has been we've done a great job in transitioning to online and virtual. In fact, we're trying to merge everything into virtual closings to make it easier for our customers as well.
And I know here in Atlanta, they put that in place with Prosperity, I think a month or so ago. So you guys were kind of preparing for the worst, and now it's here, and it's still pretty seamless. The way you guys are conducting business, and the biggest thing for especially new customers, and we talked about it prior to recording this, that at least in Atlanta now they're saying unless you are under contract, they don't want us showing property as agents. And I don't know if Florida has the same restrictions, or again, it'll be temporary, but everybody just has to step back and make sure what we're doing out there is important. And if it's part of a deal or a house that's supposed to close, then it's okay. Otherwise, I guess it can wait, right? But you guys are ready to do business, so that's a great thing.
Yeah, real estate in the state of Florida is considered essential business, so our agents are still allowed to show property. I would say more of on a case-to-case basis. We found probably 1 or 2 showings out of 10 where the seller prefers not to show the property, which is understandable. But most of the time they are allowed to go into the property and show the property and see it.
Excellent.
Which is a good thing.
Yeah. Just make safe and smart decisions, right? And anything else as far as the current market, or anything that you think's important to know in the lending world right now?
Well, Prosperity is still open for business. We are adapting to the new credit scores requirement to 640. We are shrinking our product base by only 5%. We're still pretty solid. That 5% that we're losing on product base is basically those exotic loans, bank statement loans, foreign national, and other types of loans that you don't see often. So it's not a huge loss. Good thing is that we are financially solid. We're still offering products out there. We're being very careful because we are adapting to what the government guidelines are stating, but still open for business.
Excellent, excellent. And I think the biggest question, you're available if people need to talk and have questions. Business is still happening. And what's the best way? Do you want to provide a number, email? What's the best way for people to reach you too? And I can add it later as well.
Yeah, absolutely. My phone number is 904-547-1120. You can reach me on my email, maritza.chioa@phmloans.com. Or you can also go onto my website, maritzachiaway.phmloans.com. My last name, it's a little complicated. And my first name, it's a little complicated. So I don't want to bug your clients, Tom, and spelling. So if you could put it at the end, would be great. I'm sure it'll be easier that way.
Yeah, I'll do that. And I'll have the email and your website and your phone number. So that's going to do it for today. I think we answered a lot of the pertinent and ongoing questions in people's minds about what they have to do, what they can and can't do with their loans currently. And again, it's going to be subject to change almost on a daily basis sometimes. And again, Maritza is available for any questions or help. You can do a loan application through her website too. So it's all available electronically. And we appreciate it. Once again, Maritza Chiaway with Prosperity Mortgage. And thank you so much for your time and all your great information.
Thank you, Tom. I look forward to speaking with you guys soon.